name is Mike and I'm a certified financial counselor with Debt Management Credit Counseling Corp. Today I'm going to talk to you about student financial aid. With the cost of college tuition constantly rising, it is increasingly difficult to attend a university without getting some sort of financial aid. The federal government offers a variety of financial aid programs to people studying to attain a bachelor's degree. The first thing you must do is complete a free application for Federal Student Aid, or FAFSA, to determine if you are eligible for financial aid. You can fill out a FAFSA for free at the official FAFSA website, www.fafsa.ed.gov. In order to be eligible for federal student aid, you must meet the following criteria. You must be a citizen or eligible non-citizen of the United States with a valid Social Security number. You must have a high school diploma, GED, or pass an approved ability to benefit test. You must be enrolled in an eligible program as a regular student seeking a degree or certificate. Also, if you're male between the ages of 18 and 25, you must register for the Selective Service. You must have a result of eligible or partially eligible on the drug conviction question of the FAFSA form. The amount of money for which you are eligible also depends on your dependency status, whether you're considered a dependent or an independent. If you're considered a dependent, you must report your parents' income and assets as well as your own, and therefore may receive less money because there will be a higher expected family contribution number. If you're an independent, you must report only your income and assets and those of your spouse if you're married. This may allow you to qualify for more money. In order to be considered independent, you must meet at least one of the following criteria. Be at least 24 years of age, be a veteran of the U.S. Armed Forces, be married, be enrolled in a graduate or professional education program, have children that are your legal dependents, or be an orphan or ward of the court or were until the age of 18. If you do not meet any of these criteria, but feel that your extraordinary circumstances should allow you to qualify for independent status, speak with a financial aid advisor at your school. He or she may change your status if your case merits consideration. The following financial aid programs may be available at your school. Federal Work-Study programs. These programs allow students with financial need to work in order to pay for their education. The Work-Study program has a specific list of available jobs, and you will be paid at least the minimum wage depending upon the job that you are doing. You cannot, however, earn more money than your total Federal Work-Study award. There are also restrictions on how many hours a week you can work based on your class schedule and academic progress. Grants. A grant provides a student with money that doesn't have to be paid back. They're given based on need. To determine your eligibility, the United States Department of Education uses a formula to calculate your expected family contribution. This number is calculated by taking into account your family's income and other financial obligations. If you're an independent, only your income will be considered, and of course yours of your spouses if you're married. If your eligibility changes during the academic year, you may lose the grant. Loans. A student can borrow money that must be repaid with interest. Student loans usually have low interest rates that cannot be higher than 8.25%. While borrowing money to pay for a college education can be seen as a good investment, it should not be taken lightly. Student loan payments can put people in financial hot water if not managed properly. There are two main types of student loans. Subsidized loans. This is a loan for which you will not be charged interest until you begin the repayment of the loan. You will also be exempt from interest charges during an authorized period of deferment, such as returning to school for a graduate degree. Subsidized loans are given based on financial need. Unsubsidized loans. You will be charged interest on an unsubsidized loan from the moment the loan is given to you until it is paid in full. It is not awarded on the basis of need. Although law dictates that student loan interest rates can never be higher than 8.25%, you must still be careful not to let the interest accumulate. If you do not pay interest charges as they accrue, they will be capitalized, which means that the interest will be added to the principal amount of your loan, and additional interest charges will be based upon the new total amount. If your interest is capitalized, it will increase the amount of money you will have to repay. If you instead pay the interest as it accumulates, you will repay less in the long run. The following chart is an example of how interest charges can capitalize. Please note how the interest charge each year grows when the previous year's interest charges aren't paid. With the $5,000 loan and an interest rate of 8.25%, at the end of 4 years, you will have to pay $1,865.65 in capitalized interest compared to the $1,650 that you would have paid had you not let it capitalize. When do I pay my student loan? Most student loans provide a 6-month grace period after you graduate, leave school, or drop below half-time enrollment before you must start paying back your loan. If you have a subsidized loan, you will not be charged interest during this grace period. If by any chance you cannot pay your student loan, you should contact your lender to find out about deferments, forbearances, and discharges. A deferment allows you to postpone payments on your loan for a limited time and under special circumstances. You must keep making payments to your lender until your deferment is approved. If you have a subsidized loan, you will not be charged interest during a deferment. If you have an unsubsidized loan, you will be charged interest. A forbearance allows you to temporarily postpone payments on your loan if you are unable to pay but do not qualify for a deferment. With forbearance, payments can be postponed or simply reduced. Be careful, as you will be charged interest during this time, no matter what type of loan you have. A discharge eliminates your obligation to pay back the loan. It is only given under extreme circumstances. Student loans are not even usually discharged by bankruptcy. Any or all of these financial aid alternatives may be available to you to help pay for your education. Remember, spending on education may be the most important investment you will ever make. Go ahead and invest in yourself. For more educational information, please visit our website at www.dmcccorp.org. Thanks for your time.